Hi guys, and happy new year to you all. So this one's the first video of the new year. I've just recorded a subscribers only stream, giving a real overview of the overall market. So this is covering Forex. I've gone through some gold, as well as Bitcoin, XRP, and so on. So in essence, right, there's, I suppose, a new kind of look, kind of fresh look at this kind of coming into the new year. I'm getting asked questions on the charts that I've posted, and without sounding like a broken record, it's just kind of covering what I've already covered, right? So I think the reality is knowing where we are in the overall kind of global situation for the market, and this is one of the reasons the first subscriber stream this year was done as a market overview, kind of looking at the bias and the sentiment for the bigger picture. Now, you know, I, I suppose over the last maybe 18 months, 2 years, since I started making my post public, I obviously joined forces with Paul and put together the Discord channel. And I suppose we haven't really had the ability to be bullish on kind of crypto really ever since. And it's not the fact that we're permanent kind of bears and we're not really wanting this market to be kind of down and out. I've been in crypto a long time, but I've also been trading a very long time. And putting these kind of techniques together, what we really wanted to do was to create almost a university course, and for you guys coming in as subscribers to not just kind of have a buy sell signal in terms of why now. It's really appreciating kind of why these moves happen so that you guys can do this kind of for yourself. So what we done was we looked at obviously the how we would do the teachings, and more recently we set up a skillshare course, which is a free course online. I'll stick a link up to the description in a second. So that'll be top right, in terms of the link. Now, if you are already following us on Discord, you're going to get very little information, kind of in the visitor section in terms of the events that are about to happen. If you are willing to learn in terms of the education, you don't have to jump in and take a subscription. I'm not kind of asking that. I think the general idea is that we want to work with people that are willing to work. And I guess for me, the Skillshare course is, it's free. It's a great place to start to kind of get you up to a relatively decent position in terms of your understanding and knowledge of the kind of things that we talk about within the Discord paid for subscription. So reality is, look, right, start from there. Now, when I talk about some of these moves, Wyckoff, Elliott, where the bias comes from, how I talk about the master patterns, where liquidity and auction areas are, these are all things that are kind of relevant terms. They're not simple to grasp unless you have a good base to start from, which is why I'm kind of saying, look, Skillshare is the place to start with, kind of come from there, right? Once you get there and you start to see the picture, you start to visualize the events, the happenings, the why. We go into depth in things like why the COT levels are important, looking at the leverage funds, what this chart is trying to tell you, what you can take and extract from this chart, right? So a lot of the information, it's not that we are hiding it on purpose. It's not that it's an intentional way for you to come in and buy. It's you don't understand it. It's hard to discuss the topics you don't understand, right? A lot of what I've put out there for free in terms of we don't shill affiliate links. We're not kind of promoting this and get a sign up bonus. That's not us. We don't work with brokers, exchanges and so on. So a lot of what we put out there is this kind of educational content, and the idea behind it is not just a hey, should you buy now or should you sell now. We really want, I suppose, the retail traders that follow us to get that appreciation of these market dynamics, these moves, why they're important, why they work, how they work. So I'm going to go back, 2 years now, well, 3 years in terms of December 2020. So first of all, I talked back then about why the market, why the Bitcoin, the crypto market was actually starting its kind of correlation to the bigger picture, right? This is where the institutional investors come on in, right? Now, again, if you want to know where Bitcoin is going, you have to appreciate and I keep using the word appreciate, you really have to appreciate where it's been, right? So understanding where it's going. The first thing is, in terms of the correlation, why this has become an instrument, why the big boys are interested in it, etc., etc. Now, what I've posted recently in the last couple of hours to the subscribers is this market kind of bias. The logic behind why I call the rocket call, right, which is what some of you guys will know me for, why you actually follow me, is when I called the rocket call, I'd actually called this Bitcoin reaccumulation, right, a couple of months before, right? So this post goes back January 2021. You can see the price, 32K, right? Now, I was talking about the reaccumulation phase at this particular point, trying to hint as to the market is becoming institutionalized. The market is becoming formal, I guess, in the grand scheme of things. And that transition was happening kind of in front of our eyes, right? So when I fast forward a little bit and you actually see what happened from the reaccumulation, it's easy to understand why these other posts, and I'll come back to these in a second, why these other posts led to this in terms of the distribution, right? We were clearly having the reaccumulation in and around the levels I just suggested, right? So we've had the distribution, and we've had the distribution from the 1 to the 2. We had the move up, and we had a reaccumulation happening in and around this event, right? We then moved on up, and as you can see, the call was down for a 28K roughly. This is what we're looking for, 28K kind of bottom before we moved on up, right? So clicking forward on this, we actually had our 28K, and then up we went, right? So this was obviously in March. Now, I'd posted a couple of other educational contents and posts. Again, they're immutable ledgers on TradingView. So the reason that I posted what I posted was, let me flick over to Paul's profile, was I'd covered obviously a long position from down low, right? So this goes back all the way to, let's see what the date was on this one. This goes back all the way to 2020, right? The price was like 9K, right? Called along with a view of then the reaccumulation that I've just covered, right? 23rd of Jan 2021. Then I started talking about the institutional Bitcoin, right? So this one again, February 2021. Why the institutional levels were key, right? And I've shown this time and time again, right? But it's so important for you guys to comprehend why these levels are key, why these tactics work, how they work, right? Now, this particular level was called, like I said, February 2021, and this was on the back of the price dropping based on the rocket call, right? This was knowing the moves, the levels, the why, the understanding, and appreciating that these moves are likely to play themselves out because we're becoming more and more institutionalized, right? I've covered this, and this is all free stuff, right? This is all the things that you can look at in terms of trading. You can go through my profile, come to Paul's post, and actually I'll put a link to Paul's post here, right? In a second, I'll put this up on the top right as well, right? So, in essence, what we were seeing, right, is not a "I told you so," and we're not trying to kind of highlight this in terms of, "Hey, come look at us." It's we want, we want to help in terms of mastering the market. Right? The trouble is, a lot of people want crypto, especially crypto, as some kind of lottery buy. It's not a, you put in $1, you walk away with hundreds of millions. You're not going to put in $1,000 into crypto. If you don't put in the work, you're going to walk away with less than $1,000, right? The reality is, if you want to make this, a full-time career, you want to make something of a success of your trading ability, it's now's the time to learn when the market is kind of down and out, right? Now, I've covered everything, and this is why Paul put this one together, right? I put this post, first of all, myself, and didn't actually tag all of these as a link. They were all the individual images based on the kind of copy and paste into TradingView. And Paul said, oh, you can do this as a link. So the whole post, right, if you can see these little green texts behind, right, turquoise, a little text behind the optimism, the belief, the euphoria, this is now starting to follow the Wall Street cheat sheet, right? Now, in terms of what was happening, I was trying to cover, even at the market tops, things like this, right? This was the market psychology. This kind of brings me, I think there's actually a link into this in terms of another Wall Street cheat aspect of the post. Right, so I don't know why this is taking so long to load. Let me flip over to something else a second. I'm waiting for this to load. Okay, so I'll come back onto this one then next. Let me go back to, oh, we're still not loading. Okay, so apologies for that. So let me just refresh this maybe. So in terms of an overall position, right, knowing the psychology behind the moves, knowing that we were following the kind of almost the end of the euphoria stage from a Wall Street cheat speed, perspective, then you could clearly see that the extension levels were hit around kind of key levels were being targeted. The retail were all about the hype, your Moon Carls and your Plan Bs. Now these guys were all talking 135k plus, right? I think Moon, sorry, Plan B's call was probably the most realistic out of any form of optimistic type post, right? And that was still 90 odd grand out in terms of the first call, the first by the time period that he was looking at. When you're 90k out on a call, right, it's time to kind of click unfollow, right? The idea of these guys buying and kind of shilling into this kind of hopium phase is clearly where Composite Man, the larger operators, the institutional players, clearly understood this is the hope that retail had, right? So I covered that in this particular post. It still doesn't seem to be loading for whatever reason, right? So, in essence, when we look back at the time frame and we look back at where we were kind of then, the move on down, right, was exactly the same type of scenario. It was all based around the market sentiment. It was the understanding of the institutional players knowing that retail were going to be buying each and every little dip, right? So again, when you start joining the pieces together, we're taking the COT data and we're saying, well, you look at this chart and the kind of comment and question every time I posted this particular chart, the kind of comment and question I was getting is, if these guys are all short on the way up, they're all getting wrecked. The reality is, you still need to ask the question, who is selling to you, the retail trader, right? This is the profit taking phase as far as the big boys are concerned, right? And the quicker you get to appreciate that, the easier your trading life will actually become, right? So where we've been is pretty clear, right? I feel we've had the move prior to the 2018, right? And I remember this really well. This was actually, I'd gone to a Christmas market with my parents over in Switzerland. And I remember looking at the charts thinking, what a rally we've just had. Now's the time to exit. And I was lucky. I mean, it was just almost a gut instinct. It was Christmas time. All the charts were green, and it was just, let's get out. So I remember getting out a lot in this particular phase, right? And this is all the kind of the shit coins and the altcoins and all the things that I was holding at the time. It was right, okay, let's reassess the situation. So as the price kind of rallied, and then we saw the kind of the pullback move, right? So from your first, what I would regard as the major one. We then come back down for a swing two, which took us up for a move three, right? This three was the rocket call, right? This was the start. This was the roadmap. That rocket call down to 28k was down here, right? We got exactly that. From that move up, there was a couple of key points and a couple of key days, especially within the weeks from there, from June through to July. That particular month was really kind of frustrating. There was nothing really happening. There was nothing really indicating a major swing or a major move kind of away from this. And then we had a nice little kind of spike in a rally, right? Now, at this particular point, we never really come back for any form of confirmation into the zone, right? Which meant you could easily measure the truncation on these levels. And the post I posted in August, right, which was back, here, right? The post in August at the top of what I class as the three was me saying that we're going to come down four, up for five, and finish just above previous levels of liquidity, right? And again, just like the rocket call, people didn't want that. They wanted to buy into this. They wanted to buy that, Moon Carl have said it's going to 1 million. Plan B have said this. MMC have said that. Guys, I've done this for 20 odd years, right? Paul has been trading 30 years. We bring a lot of experience to these markets, and what we're seeing right now is the institutional levels are becoming more and more valid, more and more utilized on every little swing, right? So we see this 1, 2, 3, right? Now the idea, could have been this being a four, right? And therefore that would have been a nice, four, 1, 2, 3, 4, 5, right? The problem is it capped this price straight away if that was the case. So we needed to come back down and we needed to grab more liquidity for the much bigger picture, right? So again, if you're just purely basing yourself on Elliott wave, you're going to see an invalidation of this count here. Some people have suggested we take a 1 from here. We go 1, 2, and then this being a 3, this being a 4, this being a 5, right? Which is fine. That's another option, right? I'm not disputing that as an option. And obviously, markets can change. They can reverse. They can go against the trend. They can go against, a 20-year trend in the grand scheme of things. We've had exceptional times in the last, 2 years. We've had the Trump and Biden saga. We've had the completion of Brexit. We've had what looks to be the start of World War III. We've got kind of global inflation on the rise. We've got, a recession on the horizon. So I think in the grand scheme of things, knowing where we are, right, and knowing what COVID did to the market, kind of negative oil, right, these types of plays are not your norm, right, and therefore we've got to adjust and adapt to not normal market and trading conditions, right. So coming back to now where we are, I look at these calls and go back to see if Paul's post, yeah, here we go, see if Paul's post will actually load back up. And in essence, what I'm seeing and the reason that I'm seeing this is that we're currently in an accumulation phase, right? And that's pretty much obvious, right? There's a couple of key points that we're seeing in and around this that we've actually had the first level of distribution, a redistribution, right? Which takes us into an accumulation. Now, the question is, where in the schematic are we? If you don't understand what the schematic is or what you're looking at within a schematic, revert back to the start of the video, go take the Skillshare course. It's completely free, and just get a feel for what we're talking about when we talk about these types of things, right? The next step is obviously what we'll cover, but at the moment, like I said, this is kind of reserved in terms of the subscribers. So what I'm going to do is I'm going to leave this video kind of as we are right now. I'm going to then post maybe a follow-up video maybe next week in terms of this. And hopefully in the meantime, you guys will have a chance to kind of pick up in terms of some of the education. And then watch the next video with a little bit more intent in terms of appreciating why we are where I say we are. All right. So anyway, thanks for watching. Cheers, guys. Have a great new year.